Australia's property market is charging into 2026 with prices still on the rise, even as interest rate uncertainty hangs over buyers.
Rents in Australia may not be going up as fast as they were, but the rental market remains at record highs.
Why would you pull down what makes Melbourne such an interesting, attractive, livable city?
If Australia's housing market feels like it's contradicting yourself, you're not imagining it. It's not one market at the moment, because right now, Perth and Melbourne are running completely different housing cycles inside the same country with the same interest rates. And here's the cleanest proof. As at January 2026, the home value index shows that Perth went up 2% in a single month. Meanwhile, Melbourne is completely flat. And over the last 3 months, Perth's up 7%. Melbourne, flat. This is the story of two different cities and which one you should be investing in. In this video, I'm going to break down exactly why, using hard numbers, prices, listing, rents, vacancy, and supply, and affordability, and what you should watch out for in 2026. These are the two markets that property investors have their eyes on right now, and we're going to go through it in detail. Now, here's what you see when you look at prices right now. Perth is not just positive, it's accelerating. It's been going on for years and years and years, and it's double what it was 5 years ago. Melbourne, it ain't crashing, but it's just flat. And if you invested in Melbourne 5 years ago, you've achieved pretty much nada. Next to nothing, up 15% or so, but amongst the poorest in the country. Perth median dwelling values currently sit at 961,000, Melbourne 830,000. That's a bit of a gap of about 130k between the two cities. But Melbourne, the dwellings are more made up of apartments. It's the apartment capital of Australia. So Melbourne is the value city right now, but not because it's cheap in absolute terms. It's value because it is so affordable relative to itself. Now check out this chart that shows price growth over time. And when you see this, you see that Melbourne has underperformed for a long period of time. And this is where the opportunity sits. Melbourne's underperformance for a long period of time means that its affordability compares really well historically relative to itself. We are talking about the biggest capital in Australia, the one with the biggest population, really strong population growth rates, and one that will continue to soar over the next 20, 30, 40, 50 years as it matures as a city. And yet, it laggards down here in terms of its affordability relative to the rest of the country. Even Adelaide's more expensive than Melbourne right now. So that is the opportunity that is driving property investors. Now let's look into supply, because this is the Perth story. The Perth supply story is depressing. Look at this scoreboard, and this is why Perth is flying 7% in the last quarter, and it's been flying for a long period of time, and it will continue to do well this year. Total listings equals 11,971 according to SQM, down 22% year on year. Melbourne listings on the flip side are down 5%, sitting around 36,000. And Melbourne is a bigger city, so it does carry more stock, but Perth listings are so tight. It's going to crack through that 10,000 amount in terms of total listings. That is not enough homes for Perth people to go and purchase. The key data set that you want to take out here is Perth has been in a housing crisis for a long period of time. That's why property prices have doubled. There's way more buyers than there are sellers, and there's not enough homes being built. Now, when you look at the supply data a year ago, it was pretty tight. And now we're 20% below where it is. So we are in the environment of rapid price growth because you have demand, but you don't have any supply. And that's exactly how prices rise. Now that's total listings, but you also got to look at new listings. What is coming into the market all the time? This is the flow piece. So you have total listings, the number of homes for sale, and you have what is actually being added in. Flow is measured by total new listings and the total number of new homes being built. So Perth new listings at 4,267, down 10% year on year again. People aren't listing their homes fast enough for sale in Perth, despite property prices being double. And housing cycles, what they tell you over time is when a housing cycle is beginning to top out, you have more and more people selling their home. Just imagine you're a Perth person. You might be a Perth person listening to this, or you might be a Perth property investor. If you just see yourself making hundreds of thousands of dollars, potentially doubling inside a very short time period, and you own in Perth, knowing that Perth had a long stagnation period not too long ago, you could be sitting there being like, maybe it's time to sell out. That is what goes through the minds of all those home buyers or those people who own homes in Perth and those property investors when prices go up. And many people did sell a little bit too early last year with this price boom happening. But that mentality will remain, and people can use effective property strategies as well. And I've talked about this one at length, where it's like, hey, I invest in property, and it's something I've done recently. I invest in property. And the reason why I invest in property is so I can make wealth, and now I've sold some property investments to pay down my PPOR. And you have a lot of these Perth investors that may be doing the same thing, being like, I don't want this non-deductible debt. I don't want owner-occupied debt. Not with interest rates going up, not with interest rates sitting at 5.5 and rising. Do I really want that lumpy debt on my own home? Sydney-siders feel that. They're sitting on $1 million debts being like, I got a Perth investment property that's doubled. Might have 2 of these. Or if you listen to some other people, I could sell my 2 Perth places and buy myself a Ferrari. That is the opportunities that people have out there. And when that happens, new listings go up. That's what happens after a property boom. Not in Perth, down nearly 10% in the year. Melbourne on the flip side. And this is the dangerous story for Melbourne. Melbourne new listings, 11,652, up 11% year on year. That's a little bit of a split line, hey? Melbourne new listings going up and up and up, creeping up. And that makes sense because so many people, so many Melbourneites have been like, I'm waiting to get out of this market. I don't want a Melbourne property investment. That is what happens when a market does nothing for a period of time and you're a Melbourne property investor and you've just watched everyone else go make themselves a fortune. If you're a Melbourne property investor, you're sitting there being like, I want to offload. This is costing me money to hold. Interest rates are going up. The tax man in Victoria being like, I want to take more of your money even though you haven't made any money. The sentiment about Melbourne property investing has been weak, so people are selling their homes, particularly last year because Melbourne property prices did rise 5% last year. Momentum came back in the Melbourne market, which has kind of been taken away with this interest rate increase story that has happened and the everything everywhere property boom going. So in short, Melbourne getting new listings, Perth getting less. That is why Perth flying, Melbourne pretty much stagnant. Now the Perth housing pressure isn't just in the price market, it is in the rental market too. Perth people, you are really struggling. There's a listing squeeze in the rental market too. That listing squeeze in the rental market is important. Perth's vacancy rate, 0.7%. The number of vacancies sits under 1,400. Melbourne's vacancy rate sits at 2%, still pretty tight with 11,000 odd vacancies, 10,667, while the national vacancy rate is 1.4%. So you sum it up, Melbourne's vacancy rate is dragging the national vacancy rate up. It is a very tight housing market, but it doesn't have the tightness that's required to drive price growth up. Meanwhile, Perth, you can't buy a house at the moment. There's not enough of them coming online, and so many people want them, and there's property investors everywhere that want them. And you can barely rent a home as well because there's only 1,400 of them available. So prices in rents are going up, allowing house prices to continue to rise as well. The Perth squeeze, it is a squeezed market. It is back there, and that's why prices are in a pressure cooker at the moment. For those that need help purchasing in these capitals and deciding exactly what you need to do, we are doing something crazy at Alea right now. For the next 20 clients that go and sign up, you'll get a free strategy session with me running through exactly what you should be doing based on your situation between different cities and accessing my brain across all the markets that we've been looking at and a chance to speak to me directly as part of your purchasing journey. Now let's look at the rent levels between the two capitals because this one's quite interesting too. Property investors are going to be thinking, Perth, the market that's flown, or Melbourne, the market that hasn't done too well. Let's compare the two here. So when you look at advertised rents, Perth's sitting at $787 per week according to SQM, Melbourne at $670. Obviously you have more apartments in Melbourne, so it is a bit higher to rent a home in Perth. It's about 17% higher for the median dwelling. Of course, the median dwelling between the two cities is very, very different. You might get a house on the beach in Perth, meanwhile a 2-bedroom apartment in Melbourne CBD might be the median dwelling between the two. So it isn't a like-for-like comparison. So this is the numbers check between Melbourne and Perth when you look at it. The numbers for renters suggest that rents are going to continue to rise in Perth and Melbourne yields are pretty weak. Now, when you compare dwellings per city across the board, it is quite similar. The numbers are pretty compelling. The total dwelling yield that you get in Melbourne, very, very similar to the dwelling yield you get in Perth. But If you want to go buy certain types of homes, like you want to buy a house in Melbourne as a property investor, you're probably going to stretch yourself to around a 4% yield. At Alea, we have been purchasing around 4.5, sometimes up to 5 in some cases, and I've seen a few 5.5 for the dual locks that we've been purchasing there. But most of the time, you're looking at around the 4.5% range for a property investor going and targeting certain suburbs. Check out these videos for all the suburbs we've been looking at into Melbourne specifically. That's what you're looking at. In Perth, you can get a little bit higher though. So the numbers for property investors is a little bit stronger in Perth right now. But this is where the story is a little bit interesting, because if you go back through history, Melbourne's yield has always been horrible. Right now, it ain't that bad. It's pretty much where it kind of sits in history. It's pretty good, sitting around 4%. I think that's a fair return on your capital for investing in Melbourne. Perth, on the flip side, it's typically had a much higher yield, and now it's come down closer to Melbourne. Now, when I think of Perth, I don't think of yield as being so much of a constraint. It does have some of the highest incomes in Australia, and rents can continue to go up, prices can continue to go up, and that's why it should be on your radar as a potential area to invest in. And what you're really thinking about is the run over, or when will it be over? Because you don't want to be buying too late. Melbourne is a little bit of a safer bet here because the run hasn't even happened for such a long time. It's like, hey, I'm buying at a point where prices probably can't fall anymore or won't fall anymore because it's done nothing for 5 years and inflation's been really high in the last 5 years too. So, oh yikes, Melbourne's gone backwards in real terms a fair bit over this period of time, while Perth is double. So that is some of the thinking that you'll have as a property investor between these two cities when you're trading off. This brings me to the biggest mistake people make about thinking about Perth. Perth's long run pattern has historically been strong upcycles, like we're in now, followed by long flat periods, sometimes drawdowns. I've had many conversations in the 2015 to 2018 period where I spoke to a lot of people who invested in Perth right at the tail end of the 2008 boom, thinking, oh no, why did I invest in Perth? This city sucks. I'm going to sell my property investment for less than I bought it for. And these were investments around 300 to 350 grand. So the Perth story is a very, very cautious one because of the nature of its long-term cycles. Now, this doesn't mean Perth is bad, and it doesn't mean you should rule out Perth, but it is the main cyclical market timing factor that you do need to be mindful of as a property investor. Eventually, this is what will happen. Listings will rise meaningfully. Vacancy rates will rise meaningfully too. The credit tightening, borrowing capacity thing that's going on everywhere for property investors, we've done a whole range of videos on that. And if you need help understanding your finances, our team at Flint Invest are the best in the business when it comes to mortgage broking and getting you loans and helping property investors structure exactly what they should be doing. So you can speak to them if you need a bit of help there. That's the typical Perth setup. And it could be driven by an economic change as well, right? Like Perth's boom bust sort of housing market, that's typically what it's been, is often driven by big swings in economic cycles. When interest rates are going up, typically you have Perth, Darwin, Brisbane doing fairly well. When interest rates are going down, you have the other sides doing well, Melbourne and Sydney. So some of that has completely changed, and it's something to be mindful of, what's going to happen with the Perth economy over the years ahead. So now let's go through why Melbourne actually makes sense. I've already touched on this here. We've talked about the risks about the Perth market and why you might want to be cautious despite all of the market signals suggesting really, really hot behavior there. In Melbourne, on the flip side, there's not as much compelling evidence about a short-term boom. In fact, there's none. Melbourne's not going to do well right now. If you want to buy a property investment for 2026, don't be buying in Melbourne. Makes absolutely no sense. And it's never been our argument for buying in Melbourne. The whole Melbourne story has been attached to its longer term growth frameworks and its opportunity to buy right now in terms of where it's at in the cycle. Melbourne currently is a little bit cheaper than its peak level where it was at 4 years ago. That's right. In March 2022, 4 years ago, almost 4 years ago, Melbourne property prices were higher than where they are today. 4 years ago. That's nuts. At exactly the same time, Perth, Brisbane, Adelaide up 80-90%. That is the compelling reason to be buying in Melbourne. It's about the housing cycle, the timing of it, and Melbourne does spit out a potentially good time to buy right now because you're buying below its peak. It hasn't done anything for a long period of time, so there is an attraction to it in terms of affordability. There's also another big reason for it as well. We know this when you study housing cycles. Things over long periods of time, so not 5 years, not even 10 years, not even 3 years, 3 months, 2026, whatever period we're talking about. Over long periods of time, you typically have windows of where property prices sit and where the fair value of property prices should sit relative to each other. How much cheaper is Melbourne than Sydney? If you look at 30-year growth rates, look how close it is between Sydney and Melbourne. Prices grow at a similar amount. But over the past 5 years or 10 years, you're looking at it and you're being like, there's a deviation here. And currently, the deviation between a Sydney house and a Melbourne house is sitting at abnormal levels. Typically, it's around 30%, and now it's sitting at 50, 60%. So that price gap suggests that Melbourne can continue to rise, particularly compared to its most comparable city, Sydney. The most diverse economy is Melbourne and Sydney. They are the most international markets. In Australia, they are the biggest cities, they have similar populations, so they can be compared quite closely. Similar drivers too. Yet prices are so different relative to where they typically sit. Another big reason for long-term investment in Melbourne right now too. So that's the real comparison between Perth and Melbourne. And you do it, Perth does win right now. It wins big for 2026. So there you have the head-to-head comparison. And on your screen right now, we have the full data set for what we've looked at between the two cities. But here's the summary. Perth is obviously going to do better this year. We've gone through our state-by-state rankings to begin the year, and we said exactly which market's going to do best, and Perth is shooting the lights out. It is number one. It was our number one market last year too. So we have been saying this consistently, despite videos from me coming out saying, hey, there's some risk there and it might be time to sell. We have been repeatedly saying it should be the number one price performing market year on year, and we've said that for the last couple of years. It will continue to do that this year. But does that mean you should be investing in there versus Melbourne? I don't know if the case is so compelling for everyone. If you're a property investor and you can absorb the negative yield carry and you're thinking 10, 20, 30 years, the Melbourne story does seem really, really attractive because you get the chance to buy in right now in conditions that really pretty much average. That's the best way to describe it, average. You get strong vacancy rates, like 2% is a really tight vacancy, so you're going to be able to get that tenant. You get an opportunity to buy at Melbourne's cheapest point in a very long time after a 4-year period of prices not moving at all and a fairly cheap environment for Melbourne. So you can kind of lick your lips a little bit at the circumstances of being able to buy in Melbourne right now. And over a 20, 30 year journey, there's not going to be that many periods where it's just so compelling in terms of, hey, it's the biggest city and it's cheap and I can afford it and other people can afford it, my tenants can afford it. It's a pretty healthy scenario for you to be able to get into the Melbourne property investing scene. But if you need to use equity to continue to build a property portfolio in years ahead, then you need to be very specific with Melbourne. Melbourne's going to be a different type of market with this raising interest rate environment. It's a completely different story to 2025. We called the Melbourne upturn last year, but it was based on interest rates falling. It was based on Melbourne having the most diverse economy, and here's the thing, Melbourne has the most interest rate sensitive economy. So in an environment where rates were coming down and stable, that interest rate sensitive economy started doing better. You started seeing that in the employment mix too. And Melbourne property prices grew 5% last year, which is a very, very hot year for Melbourne. And that downward trend turned into real serious momentum last year. And many of the markets we bought in are up 10, 15% as well. You can see that in the suburb level data too. So that was Melbourne last year. But right now, some of that momentum is going to be taken away, but it's a medium-term story that you're buying. So if I'm a property investor, I'm going to sum it up. If I need short-term immediate growth, and I'm okay holding onto an asset that goes up 30% really quickly, but doesn't potentially do much after that, and may even revert back down. So you might not make much money over that time period, but that 30% is going to be super meaningful for you to continue to expand your portfolio and buy another one, and you need that short-term growth. Perth is a market to be looking at, and Alea has been purchasing there recently too. So it is a market that ticks those boxes. Melbourne, on the flip side, if you're a buy and hold property investor, you're thinking long term, you're thinking 10 to 15 years, you can absorb the negative cash flow. Obviously Perth has that too, but you can absorb the negative cash flow. Then Melbourne buy and hold in specific suburbs, the ones that LA is looking at, are very, very good for this type of investment. And protect yourself by getting that yield up past 3.5, close to 4, buying the right type of housing for you. That suits really well too. And there's also another hack. I've also shared it already. The 5 opportunities I'm buying right now, and I'm going to be looking very closely in Melbourne for this. There's a couple really exciting plays there. Units between 250 to 350 grand are amazing. You're sitting at 7% yields in some cases for old red brick units. You're sitting at really attractive opportunities for even the 10-year-old units that are sitting around 300 grand, and the replacement cost is 450,000. Really great Melbourne opportunities here. They're not going to grow as much, but they're quite compensated for, and they're real zero downsides because there's going to be no construction. And over a 10-year period, the unit cycle in Melbourne will kick in because people won't be building those units in those areas where the replacement cost exceeds the actual value of the apartment that you have there. So that's the full summary there. Melbourne versus Perth, exactly what I'd do. It's not a clear-cut answer. Both of them should be on your list. If you enjoyed this type of video where I compare the two cities, give you my take, really go through the numbers, share all the insights, give you everything that you need to know to make the decision for you, and then tell you exactly what to do and what I'd do, then let me know in the comments below and I'll do another comparison video. And if you can, tell me, what would you like me to compare? Perth and Melbourne are only 2 of the markets that we're looking at, but there are other markets out there that are very, very attractive right now, even in the rising rate environment we're in today.